PantheonAI presents Ethereum soars, Schwab surges, Chevron closes deal. Welcome to the PAI Morning Briefing. I'm John, and today is July 18th, 2025.
And I'm Sarah. John, it's looking like a really bright day for investors out there, isn't it? We've got so much to cover, from market snapshots to some really deep dives into the news shaping our financial world.
Absolutely, Sarah. Let's just dive right in, shall we? Quick market overview to kick things off. The S&P 500 is trading at roughly 6,297, which is up a little over 0.5%. Not bad at all.
Yeah, and over at the Dow Jones, numbers are looking equally encouraging, about 44,484, gaining nearly 0.6%. The Nasdaq isn't far behind, sitting around 20,885, also up by about slightly more than 0.5%.
But the real dark horse this morning, and I love seeing this, is the Russell 2000. It's climbing by roughly 1.5%, sitting near 2,253. That's a strong move for smaller caps.
Definitely. Now, crypto markets, they've got their own story today, don't they? Bitcoin's showing a modest decline, about 0.35%, trading around 118,826.
Right, but then you look at Ethereum, and it's just coming in strong, gaining over 4%, priced around 3,620. That's quite the divergence, Sarah.
It really is. And it makes you wonder, what does that mean for digital currency investors and broader market sentiment? I mean, we've got these major indexes, all showing positive momentum. S&P, Dow, Nasdaq, they're all making steady advances, which really suggests investor confidence is up as markets digest earnings and economic news.
Yeah, and the Russell 2000 leading the charge, as you mentioned, that's often a bellwether for smaller companies. It could be signaling that investors are starting to see opportunities in emerging and smaller cap stocks, which to me means liquidity remains strong and risk appetites are warming up again.
Exactly. But then there's that crypto divergence. Bitcoin, the flagship, in slight retreat, while Ethereum is just soaring. Is this hinting at shifting investor affinities? Maybe driven by Ethereum's increasing use cases in decentralized finance and smart contracts? Or could it be Bitcoin's recent regulatory and environmental concerns tilting sentiment?
That's the million-dollar question, isn't it? Are we witnessing the early stages of a structural shift in investor interest within the crypto sector? Or is this just a short-term fluctuation? Only time will tell, but it's certainly something to keep a very close eye on.
For sure. So moving on, let's talk about some of the big news stories making headlines today, starting with major corporate moves. First up, Chevron's completed acquisition of Hess Corporation.
Yeah, a significant strategic move, I'd say. Chevron wrapped up its buyout after completing all necessary closing conditions, including a favorable arbitration outcome regarding Hess's offshore asset in Guyana. This really reinforces Chevron's position in the energy market and bolsters its long-term capabilities in offshore exploration.
It's huge, and it signals a period of consolidation in the energy sector where major players are positioning themselves to tap into new reserves and technologies. It's a bold step that could set off a series of M&As across the board, and it makes you wonder, if the oil majors are so confident, what might that mean for smaller competitors?
That's a great point. And speaking of big corporate news, 3M stock is just soaring towards a 4-year high. The catalyst? Lower tariff costs, which has provided a significant lift to their profit outlook.
Oh, that's fantastic. Reduced overheads, more room to maneuver and invest in innovation. For anyone watching industrial stocks, this is a prime example of how macro factors, like trade policy, can have an immediate, positive impact on a company's bottom line. It's almost like every time tariffs take a step back, 3M finds a step forward.
Right? Maybe they should add a little tariff tango to their annual investor meeting agenda. But equally compelling is the news from the brokerage world. Charles Schwab's stock has been making headlines, briefly approaching all-time high territory after an impressive earnings beat.
Yeah, and that surge is bolstered by the opening of approximately 1 million new brokerage accounts. That's a strong indicator that retail investors are actively entering the market. That kind of momentum from client acquisitions signals both a vote of confidence in Schwab's service and a broader trend of financial empowerment among everyday investors. It really begs the question, are we seeing the dawn of a new era in retail brokerage?
I think we are. And speaking of financial strength, American Express also delivered encouraging earnings, with their second quarter spending growth clocking in at about 7%, an acceleration from the previous quarter's 6%. That higher spending rate reflects not just a robust consumer appetite, but also successful initiatives by Amex to tap into new customer segments.
Which is fascinating, because it provides valuable insights into consumer behavior in the current economic climate and serves as a reassuring sign that even amidst uncertainty, spending remains a key engine of economic growth. So while we've got all these corporate wins, there's also a roundup of 10 things everyone should be watching today, including 3M and American Express reporting stronger than expected results, merger talks heating up, and broad investor attention on earnings and economic indicators.
That's right. It's a reminder that while the headlines grab the spotlight, the underlying data and trends are what really drive market sentiment. And then we've got this rather provocative narrative circulating involving former President Trump and a somewhat unexpected twist regarding monetary policy.
Oh, you mean the chatter about if the Federal Reserve were to cut rates to 1%, as is being demanded by Trump? It could paradoxically result in an increase in long-term rates? That's quite the head-scratcher.
It really is. This counterintuitive scenario has sparked debates among economists and policymakers about the complex mechanics of bond markets and the delicate balancing act that is monetary policy. It's a classic example of how interventions intended to stimulate the economy can sometimes yield unforeseen consequences. I mean, you try to lower short-term rates, and it might just push investors to demand higher yields on long-term investments. It's like trying to fix a leak and creating a new puddle somewhere else.
Exactly. In banking news, Prosperity Bancshares has announced plans to acquire American Bank in an all-stock deal valued at approximately $321.5 million.
Another sign of broader consolidation in the financial sector, where banks are increasingly looking towards strategic acquisitions to strengthen market positions, enhance asset bases, and expand customer offerings. For investors, it's a clear signal that consolidation in banking is likely to continue, especially as institutions navigate the current economic environment.
And on a lighter but no less significant note, we have a story about Stephen Colbert and his run-in with what's been dubbed the, quote, Trump transaction tax.
Oh, that one's interesting. While we usually stick to corporate news, this tale really touches on the intersection of entertainment, politics, and economics. Legal settlements involving high-profile figures like Trump apparently have far-reaching implications, sometimes eroding shareholder value. It just makes you wonder, if a late-night host's tax troubles can send ripples through the market, what other unexpected factors might we be overlooking?
Right? It's a wild world out there. But moving on to a story with a, quote, kitchen sink metaphor. The economy has been described as having the proverbial kitchen sink thrown at it, yet it appears to be weathering the storm without descending into a full-blown recession.
Yeah, the underlying factors here are persistently low unemployment and robust consumer spending, which continue to serve as critical pillars of economic strength. The narrative is clear. While there are challenges and uncertainties, the fundamental drivers of economic growth remain intact. It's actually a glimmer of optimism in an otherwise complex economic landscape.
It really is. And finally, we have a decision by the Supreme Court that allows former President Trump to proceed with a series of Department of Education layoffs, a move with significant ramifications for student loan borrowers and the broader education sector.
Yeah, the legal and social implications are manifold, with hundreds of workers affected and potential impact on student loan administration. It just underscores the ongoing interplay between politics, policy, and market conditions, raising important questions about the future of higher education administration.
So having gone through all those headlines, let's dive into some detailed sector analysis. The tech sector, first off, it's really been the engine driving much of the market optimism these days, hasn't it?
Absolutely. Increased digital transformation, sustained consumer demand for innovation, tech stocks just keep capturing investor attention. We've seen impressive earnings reports, strategic acquisitions, a flurry of innovation announcements. But, as exciting as this is, we also have to keep an eye on potential regulatory risks, especially as governments worldwide scrutinize big tech more closely.
Totally. It's a fine balancing act between harnessing innovation and maintaining oversight. The smart money will be on companies that can adapt proactively. Now, switching to the energy sector, Chevron's acquisition of Hess is an unmistakable bellwether. It's not just about consolidating assets. It represents a strategic vision to secure long-term operational efficiency and tap into emerging opportunities in offshore exploration.
And it comes at a time when global energy demand remains robust. Yet nations are grappling with the need to transition towards cleaner sources. So you've got this interesting dual narrative. Traditional energy majors optimizing existing operations even as they hedge against a future that may favor renewables. For investors, that divergence creates both opportunities and challenges.
It really does. Now let's look at financial and banking. The news from Charles Schwab and Prosperity Bank shares just exemplifies the dynamic nature of financial services today. Schwab's impressive performance, buoyed by robust earnings and record brokerage account growth, is a testament to the rising tide of retail investing.
Yeah, in an era where investor empowerment is becoming the norm, the financial sector is experiencing a renaissance driven by technology, improved customer service, and innovative business models. On the other hand, the acquisition moves by institutions like Prosperity Bank shares signal that traditional banks are actively repositioning themselves to remain competitive. Agility and innovation are key here.
Totally agree. So what about the global market implications of all these developments? I mean, it's a big world out there, and what happens in one market often reverberates across continents.
For sure, the strong U.S. equity performance, coupled with diverse outcomes in crypto and active corporate maneuvers, sends ripples through emerging markets, international trade, and global investment strategies. U.S. companies consolidate, build strength, and international markets watch for signs that these moves might spur similar consolidations abroad or indicate heightened competitive pressures. And the macro discussions around interest rates, potential long-term effects of short-term rate cuts, that affects how global capital is allocated, everything from government bond yields in Europe to emerging market debt instruments. It's a truly interconnected web.
It really is, and that's where global investors really have to stay vigilant, continuously weighing geopolitical risks alongside corporate fundamentals. So let's bring in some expert insights and forward-looking predictions. One trend that stands out is the increasing reliance on data-driven insights to guide investment decisions.
Right, with platforms like PantheonAI paving the way, investors aren't just relying on legacy data anymore. They're tapping into real-time analysis that offers nuanced understandings of market sentiment. Experts believe this technological shift, especially in algorithmic trading, is likely to accelerate, potentially leading to even more volatile yet opportunity-rich markets. The takeaway for seasoned investors is that while these new tools may amplify the pace of market movements, they can also provide richer, actionable insights.
And there's also the question of sustainability, not just in energy, but in corporate strategy as well. Companies like 3M and American Express, showing positive earnings, their fundamental drivers seem to align with the broader macroeconomic narrative of robust consumer demand and improving operational efficiencies. But within each sector, the challenges remain.
Absolutely. In tech, the looming specter of regulatory intervention persists. In energy, the dual pressures of operational efficiency and environmental sustainability are ever present. And in finance, it's balancing traditional business models with the pace of digital transformation. It's a complex juggling act that requires strategic foresight and a readiness to adapt.
You know, sometimes the financial markets just feel like they're running a comedy club, always serving us unexpected twists and quirky narratives.
I know, right? Just when you think you have everything figured out, a headline about a television host's tax troubles or an unexpected acquisition reminds you that the world of finance is as unpredictable as it is entertaining. But that's the beauty of this field. It keeps us on our toes, constantly reevaluating what we know and how we invest.
So as we round off our discussion for today, what does all this mean for investors? The key takeaway, for me, is that while there's undeniable uncertainty in the backdrop of political and global developments, there are definitely pockets of strength across multiple sectors.
Agreed. Equity indexes are performing steadily, small caps are showing robust gains, and even amidst the turbulence in certain crypto segments, there are opportunities emerging for those with a keen eye on risk and reward. Whether it's the energy beat driven by major consolidations or the financial sector's renaissance fueled by technology and customer-focused strategies, there's a lot to be optimistic about if you know where to look.
Absolutely. And before we go, I want to pose a few thought-provoking questions for our listeners. In today's environment, how do you think smaller companies will continue to find their footing amidst the consolidation trends led by giants like Chevron and Schwab?
And with technology reshaping every aspect of our daily lives, will regulatory measures become an even more significant challenge for tech companies in the near future? Lastly, as the extraordinary successes of companies like American Express and 3M continue to drive optimism, how will these forces shape broader consumer behaviors and ultimately the geopolitical landscape?
Yeah, we encourage you to mull those questions over, share your thoughts with our community, and, of course, feel free to reach out with your own inquiries to our AI co-pilot at PantheonAI.
So, to quickly revisit our key takeaways, market indexes are in a positive zone with steady gains across the board. The Russell 2000 is riding a higher wave, hinting at potential opportunities among smaller cap stocks. In crypto, Ethereum's robust performance is offsetting Bitcoin's slight decline, setting the stage for interesting dynamics ahead.
Corporate actions, from Chevron's acquisition of Hess to strategic moves by 3M, Schwab, and American Express, are shaping sector narratives in energy, industrials, and finance. Macro discussions around monetary policy and geopolitical implications add layers of complexity, while regulatory challenges and innovation pressures continue to drive unexpected market twists.
As always, we at PantheonAI are here to help you navigate this multifaceted landscape. Think of us as your information co-pilot, guiding you through both the calm and the turbulence in these markets with deep insights, expert analysis, and a few well-timed jokes to keep the mood light. Because if there's one thing we know, it's that learning shouldn't feel like a full-time job.
Exactly. Thank you so much for joining us on this deep dive into the world of finance today. Your engagement and curiosity really drive our discussions, and we truly appreciate the opportunity to share these insights with you. Be sure to come back for the next episode tomorrow, where we'll continue exploring new stories, fresh trends, and more compelling questions that keep our community informed and engaged.
And remember, whether you're an investor, a trader, or simply an enthusiast of the financial world, our AI co-pilot is always here to answer your questions and spark new ideas. So until next time, keep your eyes on the market, your mind open to new opportunities, and your sense of humor intact.
Thank you for choosing PantheonAI's morning briefing. This is your trusted guide to a dynamic financial world. Enjoy the day.
And as always, learning shouldn't feel like a full-time job.
PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.